Yeah, hi Trace. I want to talk about the gold market because I think we're at a really interesting stage, and certainly from a technical and a price action perspective, there are developments which I think need to be on people's radar. And as we go into a big week next week, where we've got some fairly tier one event risk, the gold market will be very much front and centre. Obviously, got US CPI next week, PPI, retail sales, and Jerome Powell speaks. But if we have a look at the developments, if you have a look at trading conditions in gold at the moment, bid-offer spreads are pretty tight. You've got good liquidity at top of book. And you can see the high-low daily trading ranges at the moment. The 5-day average is running around $25. So there's certainly enough there for the day traders to plough their craft in at the moment. It has come back a little bit from where we were back on the 16th of April, where that high-low 5-day average was running around $58. Very, very good conditions there for the short-term intraday traders. Obviously, that was very much skewed by that massive $97 range that we saw back on the 12th of April. But still plenty for people to cut their craft in, and so well above the levels that we saw back in September of last year, where the high-low range averaged about $11, which was pittance in terms of movement. We have a look at expected movement in the market. We go to the options market for that. We can see 1 week implied move in gold running around 16.6%. What does that mean? It effectively means the market is pricing about a $50 move up or down with about a 70% level of confidence. And that takes in all of the considerations that we just talked about. And the market is expecting some life to play through next week. So obviously that matters for our risk management, our stock placement, and various factors as well. We have a look at the performance in gold over the last 5 days. It's pretty impressive. We're up 2.2%, certainly well below what we're seeing in silver, which is up nearly 7%. So, if you want the momentum move, that high beta cousin is certainly where the action's taking place. But what I like about the factors is that gold is rallying in all currency terms at the moment. It's not just the dollar play, it's moving up in all currency terms, and certainly against the yen, that's where you're getting the gold in yen terms is where you're getting the big performance. But gold year to date is up 13%. So, the bulls do seem to be wrestling back a little bit of control playing through. Now, of course, we can look at this on a fundamental perspective and have a look at the influence of the US dollar, US real rates, interest rate expectations based on economics and the 2 rate cuts that we're seeing priced in. We can have a look at geopolitics. We can have a look at trading volumes that are taking place on the Shanghai Futures Exchange, and all these various factors. But what matters really is how this feeds into price and really what the aggregation of flow is telling us and where that kind of risk reward trades and where we feel like the market might be heading. Now, I think it's interesting if we take that big picture situation and we have a look at the weekly chart, we can see that this week has printed a higher low and also a higher high as well. And that gives us a little bit of a positive skew. If we can close above last week's high, would certainly be a big positive. This daily chart, I think, which really interests me at the moment, because we pushed up into those 24.17, 24.30 levels recently, all-time highs playing through, and then we found good supply playing back. We pulled back a little bit, and we've just really carved out a range over the last week or two of 23.52 down to 22.85, and market's really been just respecting that. We've seen the RSI at 50, we've seen, just moving into that into that range. But now we're testing the top end of that range, and this is the development which I think needs to be on the radar, because we can get a weekly close above 23.52. Obviously, that opens up the upside then for a potential rerun back into 2400. We've got that 5-day exponential moving average below price. The price is holding above that level, which gives me a small positive bias at the moment. We've got a positive rate of change. And if we can get that weekly close above those levels, obviously a positive development as well, and gives us a chance to potentially bull trend. On the downside, below that lower band, we've got the 50-day moving average, which has been a pretty good trend filter, and obviously the Bollinger Band to the bottom as well. So that's where your big support levels are playing through. But it's that potential break to the upside that I'm really interested in. If we go into the shorter term time frames, that hourly chart looks really interesting, because you can see that real tightening of the Bollinger Band, that compression in volatility. We break through that 23.20, and we've just had this really nice bull trend that's been taking place, taking us into the top end of the range that you've seen in that daily chart. But it feels like it's just fizzling out a little bit. We'll have to see what happens in the session ahead. So some positive developments, that range break, potentially one that needs to be on the radar. Positioning's okay. If you have a look at futures, we do have in the managed money report 135,000 net long contracts. That's from April, but it may have come back a little bit. So I don't think positioning's overly stretched at the moment from that perspective, but we're coming into a big week of event risk at the moment. If that price action can break, potentially we can see people looking to chase this market. One for the radar.